Oh man, gang. Look, fellas, we here Monday night. I ready to kick this thing out, brother?
Let's do it.
Let's do it. Welcome to the AdminisTraders podcast, featuring your host, Mr. Kendrick Thomas, and my co-host, Mr. Jose Ortiz. This information is used for educational purposes only. What do you do, KTTeeV? This is KT, and I'm coming at you live with another episode of the AdminisTraders podcast. And on tonight's podcast, look, usually y'all used to just me and Jose just landing around here doing something. But tonight, we got the OG in the building, man. Zeke from Dream Green. Look, brother, I can feel it right now. I'm dreaming about it. How you doing tonight, brother?
I'm doing good, man. Everything. Appreciate you for inviting me onto the show.
Look,
Man, welcome to the show, man.
Telling you, man, you know, it's crazy out there, man. So anytime that we can get somebody on, you know, you think about the subscriber base, the knowledge base, the consistency of it all. Brother, I wouldn't have it no other way, man. So shout out to Big Jock too, man. Jock said, Jock, I'm online. I can't send you a link. But yeah, shout out to Jock, man, for coming through, man. I appreciate you, brother. Other than that, man, we got Zeke in the building, but then we got the co-host, one half of the KT and
JoJo, baby.
And that boy, man. Look, bro, that was a little bit better, fam. You know, sometimes you be kind of slow with it, but I think we on track tonight, man. So welcome tonight, y'all. Got a great episode set up for you. So much to talk about. Of course, we're gonna go through our heat check. We'll go through our fear and greed, kind of look at those VIX. Then we got even more information besides me and Jose to talk about this thing from a different perspective. Of course, we got some questions set up for Zeke tonight, so I want him to get into a little bit of that long-term play. If you go to the brother channel, you will see dividends, and then if you go down a little bit more, you're gonna see some more dividends. So just making sure that you get locked in with what he got going. So we'll hear a little bit from him throughout the episode. Man, I think without further ado, man, let's get into a little bit of this news. Tonight, for the news, we're going to keep it very simple. If you have been alive over the last few days, I remember last Thursday, I want to say, fellas, and y'all correct me if I'm wrong, but last Thursday, very slow day. You like, oh, man, this market trash, bro, boo-boo. Then Friday come. I don't know. Look, you know, we work for a living, so sometimes things get a little crazy while we at the workhouse, and you just open your phone and you be like, damn. It's either you was on the good side where you was going with it, or you was on the other side where it was not too long. Zeke, man, I know you at the schoolhouse too, man. Did you happen to just catch anything from last Friday?
Nah, I know. What, last Friday the market was going up, huh?
Yeah.
Yes, sir. That was right after they closed the budget deal.
Plays, but really, I just swing trade. But I'm on the other side of options. A lot of people buy options. I sell options.
So yeah, that boy on the other side.
Look, I tell you what, KT. I tell you what, man. We've been talking about that AMD.
Yeah,
and you know that AMD hit it on Friday. So if anybody been getting into that AMD while we were, you know, talking about the dip that it was going through, and then you know we're looking for that pullback, and then that pullback came, and on Friday, if you followed us. You got some rewards on that day.
Hey, look, man. I remember that brother text me. Hey, you know how you feel like left out Lamont? That's how I felt, man. I started getting everybody text. Ding, ding, we up. I was like, dang, I'm here looking for the VWAP. We got all kinds of stuff. Hey, all right. So what we talking about today? Goldman Sachs. Of course we know, and this is what made me think about that going up. Goldman Sachs says global hedge funds are piling into U.S. technology stocks. And so when we think about what's happening today, what's been happening really for the last year, anything AI related has been going to the moon. as we look at our world and we get more technical, it would make more sense. But it says global hedge funds are having a notable shift in sentiments toward the technology stocks, accumulating positions in the sectors at the most rapid pace in the last 2 months, right? And so we look at our keys and we saying, what are the people with the big money doing? How can we kind of follow them? And so where are they spending that money? So this is why we bring this news on. And remember what I said, the renewed optimism on artificial intelligence has a positive outlook for the major global tech entities and are key drivers of the buy-in. So, man, I'll start out with you first, Man, what you think about this AI?
Yeah, that's something I've been investing into since like last year. They got like some AI ETFs. But mainly I'm looking at the big ones to like be the base of my portfolio: Microsoft, Google, Amazon, Apple, even like companies like Walmart, even McDonald's. They're going with selfless checkouts or no cashiers at some of their restaurants. They don't have cashiers at all. You come in, order your own things, and they just do the cooking, and you your own cashier. So there's a lot of companies that's, if you catch the trend early enough, I mean, you could catch it at a pretty good price, because 10, 15 years down the line, you're going to be hoping you got in and then miss out. But if that's just playing it safe with the big top blue chip style companies like Microsoft and Google. But there's some smaller AI companies that you could take a risk on, be a smaller portion of your portfolio, that if it do hit, it'll make you more money than everything else in your portfolio. And those are the ones I'm really trying to find. Those are the ones I'm really trying to look into. They're hard to find because these big companies, they buy up or acquire the smaller ones so fast. Like Apple buys anything. Like Apple over the last year bought like, they acquired 20 something companies that got to do with AI. So, I mean, they out there, but it's safer to just go with the bigger companies.
Man, it's like that old school, man. That boy say right now, man, somebody is eating their breakfast, man, thinking about taking your spot. Now eating cereal, man. Apple say, you know what? You're right. Let's go find them boys, bring them over here.
They acquire like 30 some companies every single year. They either take them in, use that technology that they had at the smaller company, and implement it into the own, so they buy them up so they won't be a competitor.
Yeah.
Yeah,
You're right, bro. That was another one that I was looking at. And I don't think it was on this news one, but they had just paid maybe $12 million in Russia that they lost. Maybe it was 12 million. Because they were deboing people in the app store as usual.
Mm-hmm.
Dang, what you got, Jose?
You know, I agree with the bigger tech companies, the big blue chips. You know, it's a little different for us doing the options because, you know, with your expiration dates, you're looking at that quick hitter. You're looking at, you know, what I can do right now. And when you're looking long term and you want to do leaps, I think that your safest bet is those top dogs. I mean, you know, you got your Microsoft, AMD, NVIDIA. You know, if you're doing the options game, those are just, you know, the names that you want to get into. Some of the people that we do follow, though, you know, they do a lot of penny stock trading, a lot of, you know, smaller, lower end that could be AI. But I do think, you know, like Zeke said, it's a little bit more of a risk when you're looking at piling those up and what if they never turn out. I know one thing that we got into a few years back was the SPAC companies, when those companies were coming out with those IPOs and getting their names out there. I know we bought some up and some of them, you know, have gotten, you know, relatively strong. You know, your SoFi is out there, you know, and I heard rumors that they were heading into that AI market as well. But I think it's hard to find those up and coming companies that can really, really be credible and down the road try to keep them in your portfolio.
Now, this is the question right here. Are we talking singles, like single companies, or are we talking long-term ETFs? Which one you say first, E?
I buy both.
Yeah.
You talking about like I do both. I dollar cost averaging on both kind of evenly. Two different ETFs, and then the company I'm going heavy on right now is Apple.
Mm.
Yeah, and then like last year was Waste Management. The year before that, it's like I kind of do a lot of research towards the end of the year, start looking at people's cash on hand, the portfolio, and things like that, and then I kind of ride with that company for the year. But right now, it's been Apple for about the last year and a half. I still buy other stocks, but I'm heavy on my ETFs, and then my independent company would be Apple.
Yeah, come on, man, got to get in there.
Boy, that Apple, bro. Well, I got leads.
Yeah, I was say
I got Apple leads for January 2025. 250. I think Apple could get there relatively quickly. I think.
You got a leap on Apple.
Yeah, for 2025, January 2025, 250.
That's right around the corner.
Yeah,
that's right around the corner.
It'll be quicker than you know it, man. They say people say that all the time. I said, at some point in life, you just get into a cycle, so you never think about the days. I say, if you feel like time is moving fast, that means you're not doing enough. Hey, I'll put that back though, man. I digress, man. All right, so now, what we'll do, let's take a quick break. Then when we come back, we'll get into our heat check. Let's kind of look into this VIX. Let's see what that Apple talking about, man. So we will be right back. All right, heat check. All right, let me get this heat check squared up. So I guess we will start with, let's just start with the heat map itself. My God, man. All right, so now, did you ever check this thing out, Zeke?
Yeah, I've seen it a couple times. I look at it every now and then.
Every now and then. They don't too much weight, too much on your no, see, that's what I be telling my man. But when we think about when you just jumping into this thing, I be trying to give everybody all the tools that they can use to at least kind of know what's going on. And so for the people who don't know, this is the heat map? Sorry about that, y'all. So the heat map, this usually represents the performance of the various stocks or assets, and it gives us a snapshot of what's hot in the market and what's not in the market, right? And so remember, each week we combine this with the VIX and our fear and greed index, and that's what helps us make more informed decisions on both the market sentiment and the market trends. And so as we dive into this, where did the money go today, people? Where did the money go today? It damn sure wasn't on Microsoft and Google. But like you said, OG, what we got right there? Apple. Yeah. I was looking at that Apple today, man. They kind of folded at 195, but then they was on their way back. I can't remember where they ended at the end of the day. It was crazy in my world by then. I don't know what's happening. Let's kind of look at what we got over here. NVIDIA. What we think? We thinking 600 for NVIDIA, y'all?
Yeah, that's what we're sitting at. Yep.
Yeah.
600 on hold.
It's up there.
Yeah, that thing is up there, man. Look, man. Gosh, and when they be jumping, I think about having that thing at $122, like within the last year and a half or something. We're up in there, man. Now through the roof, man. AVGO still have been going. New highs on Lam Research. That thing has been moving too, man. I think it would hit probably about 800. Let's see. But so the basic thing I wanted to kind of look at this is, even though they are red now, please remember, people, we're looking at our tech, right? Because we're looking at these AI plays, still looking at their healthcare, right? It's rough over here for this oil and financials, man. What you think about those financials?
And oil's headed towards $70 a barrel, so that could be a little rough for for oil for a little bit. But like we've been saying though, a red day is an opportunity to see why and then say bye. So
Same.
you know,
hey, but I'll tell you this: if they bomb one more place over there across seas, that oil might pop back up on y'all boys. I'm just trying to tell you, man.
but let's not hope for that though. You know,
you're right. You're right. You were right, fam. I apologize. I hope for it, bro. All right, man. So basically that's what I want to get into now. Let's look at the let's look at a little bit of this fear and greed. What about that VIX? See? 13. So for me, man, when the market is going up, VIX is going down, I feel a warm, fuzzy feeling on the inside because people spending their money, but they not necessarily scared to spend that money at this point, man. What's y'all input on that?
Well, I was looking at the fear and greed index, and I know you'll show it here in a little bit, but I still think we got room to the upside before people really start getting, feared of economic disaster or whatever, and start selling. But I think, we've been teetering back and forth between, a good, low greed and then your very, very, very high greed. But I think we got some room. I know we went to the left a little bit, couple, last week, and now we're headed, around the 70s again, in that fear and greed. So I think we got some room to the upside. I also think that with that VIX that you were saying, it's going to eventually turn. I think that if we continued from last week, we had one green day, I believe. It's just a pullback eventually is destined to happen. My only concern right now is that with last Friday and then perhaps today, we're looking at all-time highs for SPY. We could hit 500 soon. Like how big of a downturn and how big of a pullback and how fast of a pullback will happen once we keep going to those all-time highs.
Got anything on that, Z?
Yeah, I mean, I'm literally waiting for everything to pull back. Everything too expensive for me. And every time I think it's gonna pull back, it just make new higher highs or new 52-week highs, and ain't nothing really pulling back. I got really dig down in the back to find a decent quality company at a cheap price. I mean, you can find a couple companies here and there for a good value, but I mean, the ones I really want, they all overpriced for me right now. So, I mean, I still dollar cost averaging just a little bit, but like the companies I've been keeping my eye on for like the last year keep making 52-week highs. So I'm waiting.
Yeah, that's it though. Like they say, the best trader, the first best trader is a dead trader. But the second best trader is one that puts it there and forget. So look, man, it's going. But you got to wait on that thing.
If you got that money, just because you can, don't mean you should.
Yeah, exactly.
I'm holding, man. I'm coming because I'm that portfolio, man. I got about 3 things in there, man. I got nothing but money on the sideline, man. I bust down a few options, but man, I'm telling you, yeah, man. Shit, I'm waiting. That's why I say let me get back in and redo this thing. But I've been kind of shifting the portfolio, getting prepared for that. But I want to get more into these dividends, man. So that's what I'm looking forward to tonight, man. Because I got a lot of cash in that long-term portfolio, and man, I don't want to manage that. I get enough heartbreak over here with these options. I just need to let that roll, man. So, man, I'm looking forward to that tonight, man. Let's take a break. Jose, you got anything before we crash out?
No, man, I'm good. I'm good. This, remember everybody, what goes up comes down. What goes down, comes up. So, people need to make sure that you manage those risks. You think about what it is you want to buy. Like Zeke said, if you've got a certain price point you want to get in at, or if you think it's overbought or too high, then, sit on the sidelines because, you don't have to trade every day. And so just keep that in mind, guys, as we move forward, because, we do see potential for pullback coming. And I don't want to say it, but last year around this time, you think about the trend of the market, we went down and we went down for a while. So, it was a steady downtrend, and so that's something that we just have to be mindful of the markets because it is a cycle.
Hey, it is. All right. And so there you have it, people. That was kind of the journey connecting the VIX, the fear and greed, and the heat map. So remember, tools like these are only simple pieces of the puzzle, right? Each providing a unique perspective on the market. So just keep it locked. Stay tuned. What we'll do each week, we'll kind of go through that. Try to give you a little bit more. So like I say, it's not the full, but if you know that those pieces are there, good things to be able to lean on. What we'll do, take another quick break. When we get back, man, we got Zeke on the hot seat, man. AdminisTraders Podcast. We'll be back, y'all.
You see the drippy, I'm fitted up. Hop in my car and the giddy up. Secure the bag, yeah, I get the bus. Pick it up, pick it up, pick it up. You see the drippy, I'm fitted up. Hop in my car and the
All right, y'all. Welcome back to another episode of the AdminisTraders Podcast with me, KT, and
JoJo.
God damn, bro. Maybe it's just a pause inside the system, bro. I think
it is, man, because I'm going right on time, man. I'm going right on time.
All right, man. This is it. And we also got the guy himself, man, Mr. Zeke from the Dream Green Show as our special guest. So with over a whopping 275. Man, golly, bro, how long you been doing this, man?
I've been making content for a while. Like this channel, probably about my 5th or 6th channel I made in my lifetime. So I've been making content for a while, but for this channel, probably I've been doing this one for 6-7 years. 7 years,
man. Yeah. And dropping nothing but heat seekers each week, man. 275,000 subscribers to YouTube, over 11,000 followers on the Instagram. Background in education. Brother is still teaching, still coaching, still on the front lines. And so what we're going to do, Zeke will bring us a unique perspective tonight on the world of stocks, dividends, and he's already dropped a little financial empowerment on us on just how we can kind of set ourselves up, what our future could look like. But we got to be patient. So once again, thank you, brother.
Yeah. So my name's Zeke. I run the YouTube channel, The Dream Green Show. Basically, I'm here. I'm gonna tell you a little bit about dividends. Dividend investing is when a company pays out a little thank you money to their investors as a way to say, hey, thank you for investing inside of our company. It's passive income. Just from buying one share of this company, you're a part owner of these companies, right? When you're part owners of these companies, when these companies make money and they pay dividends, they pay it back to their investors, and you don't have to do nothing at all. All you do is wake up, bam, you get a check inside your brokerage account. Now, there's different companies. They either pay monthly or quarterly paying dividend stocks. Monthly paying dividend stocks pay every single month, once a month. Quarterly paying dividend stocks pay 4 times a year or every 3 months. Now, this is where new investors get trapped, right? They say dividends. Oh, I'm making this amount every single month if I invest this amount inside this company. Well, you're still investing inside of a company. You don't want to invest inside any old trash company or any old ugly looking company that pays a high dividend. That's called the dividend yield, right? So there's some companies out there that has a dividend yield that pays 15, 18, 17% dividend yield. So you say, hey, if I invest $1,000, I'm gonna make this every single month. Not knowing that if you buy this company at $20 per share and it's a horrible company because they're just a horrible company, at the end of the day, yes, you're gonna make 17% from your dividends that year, but that company might go from $20 all the way down to, let's say, $10. So you lost half your investment, but you're making 17% yield from your dividend yield. The other trap that investors get into is that, okay, you hear that it's a good company. Everyone heard of Ford or heard of AT&T. Oh yeah, I know AT&T. I know Ford. I got a Ford. Some people got AT&T, right? So you invest inside these companies because they pay a 7, a 8, 11% dividend yield. Can't be a bad company, right? Like Ford. But if you look at the track record, they really haven't been going up these last couple of years because, I'm not going to say this is the reason, they have such a high dividend yield that they have to pay back to their investors. Let's say they got 11% dividend yield. They have to pay that back to their investors. So they have no money left over to reinvest back into the company to help that stock grow in the future. So sometimes when you're looking at a good quality company or a good company that got a high dividend yield, they don't have no money left inside their portfolio to reinvest inside that company in order to grow your shares. So now let's say you invested to Ford at $10 a share, and 5 years later, Ford is still at $10 a share. So you're making your dividend yield, but you ain't getting no equity growth inside of that company. Now, what I like to do, the simplest thing to do is to invest into either A, dividend aristocrats, or B, dividend kings. Dividend aristocrats is companies that's inside the S&P 500. That's the top 500 companies in America, right? You inside the S&P 500 and you increase your dividends every single year for the last 25 years. That's the dividend aristocrat. That means these companies lasted through a recession. These companies lasted through a pandemic, coronavirus. These companies was able to increase their dividend yield through that, right? And that's companies like well, it's a whole bunch of them. So let me get to dividend kings. Dividend kings is the same thing, except if they increase their dividends every single year for the last 50 years. That's longer than we've been alive, right? So for the last 50 years, they went through multiple recessions, multiple depressions, multiple wars. They was able to increase their dividend yields every single year. Johnson & Johnson, Procter & Gamble, PepsiCo. So now I'm looking at a company like Pepsi, right? Pepsi just became a dividend king. They increased their dividends for the last 50 years, 51 years now. And they have a dividend yield of around 2 to 3%. Yes, it's not the 11%. Yes, it's not the 17 double-digit yield that you're looking for in dividends, but Pepsi was able to grow their company with a 3% dividend yield all the way from, what's Pepsi at now? Let me look it up. Almost double or triple their value in the last couple of years. Pepsi PP.
I see. That's what you
Pepsi
want.
is at 165 right now. Pepsi is at 165. If you've been dividend investing for the last 10 years, you tripled your investment, not only growing your dividend yields, but also the equity in that company. So you also want to look for growth stocks. So this is my strategy that I always tell people. Now, the bigger part of your portfolio is investing into good quality stocks that just so happen to pay dividends. Those the ones that you could really live off of, that you could pass on to your kids, and your kids will never have to work a day in their life. Now, the smaller part is, all right, I got some bills I need to pay. I need to make sure I get $100 every single month from dividends. Those the higher dividend yields that's not so risky, but they do have a high dividend yield. They might not grow as much as Pepsi. They might not grow as much as Microsoft and Apple, but it is nice to have a good dividend yield to pay off some of your bills and to actually live off of. Now, if you confused about that, you can look inside an ETF if you're not really sure what to invest into. ETFs, that's a good one. It's SCHD. They have around about a 3.5% dividend yield. They have a portfolio full of dividend paying companies that spread it out throughout the market, so you don't have to worry about anything at all. Now, if you are on the risky side, if you do want to make a little bit more from dividends, I would say look at some dividend REITs. REITs are real estate investment trust companies. By law, they have to pay out 90% of their taxable income back to their investors in the form of dividends. And those are the ones that pay monthly paying dividend stocks. And my favorite one of those would be ticker symbol O, Realty Income. So now you can rewind it, take down your notes, say, okay, I want to be more risky. I'm going to look at a real estate REIT, or I want to play it safe, looking for my retirement fund, something that I could pass on to my kids. Look at SCHD. Or if you do want to look at those individual stocks, I'm going to look at some dividend kings.
Come on, man. Come on, man. What? Look, man. Yeah, look, y'all, we gone for the night. We gonna shut this thing down. It really ain't nothing else to say. But no, man, thinking about those dividends and being able to put that money there, I'm so glad that you made that point, though. That even if you get something that got that high dividend, but if that company is trash, you still lose in there, right? You don't got nothing just trending down just to get a dividend. I remember I held, dude, I held that Verizon through the storm, dude. I'm talking about, like, man, that thing went all the way down to 33, man. I was just like, Lord, I was still holding. But, you think about it now, it's been up, it's back up. So I'm really now kind of looking for some more places, but I always want to look into that. So that's definitely something to go. And so now when you think about, let's say, for instance, I got $1,000 account. You say majority should be inside of those dividends. Can you put a percentage to that majority?
What'd you say? I missed it.
Oh, yeah. So can you put a percentage to that majority?
If you making a dividend portfolio, I would put 50% inside of an ETF, like SCHD, 25% inside a Dividend King, and then the other 25% into a monthly paying dividend stock, like a real estate REIT.
Yeah, that's the game right there, y'all. I'm probably gonna go back and rewind this myself tonight.
That's all the stock market is a big game of patterns.
Well, what Jock say, my boy Zeke speaking fire. Yes, sir. What it do, JPA? Hey, man. So yeah, man. Now, what made you first, man, say I want to get into this? Because man, I'm from the hood, right? So I wasn't listening to none of this until I got plugged in with Jose. And I was like, man, that is something real, right? I remember looking at the ticker, like going across. I was like, man, what the hell is that now? I'm glued because I'm waiting on my stuff to pop through. But man, how long have you been doing this, and how did you even get into just seeing that the stock market was real?
Well, me, I always been like a math person, like a numbers person. Always, I'm really big on math and really big on technology. I'm like a tech nerd. I'm really a nerd, a math nerd. But when it comes to like English, nah, don't ask me to. Don't tell me to come to the front of the class to read a passage. No, tell me to come to the front of class to do this quadratic math equation. Okay, cool. I'll go up there and do some algebra, some trigonometry like it ain't nothing. But don't ask me to read anything. So I always been good at math and technology. So what started off was way back in the day, which don't seem like that long ago now. I was really big on cryptocurrency because I just love technology. I love numbers. I was buying Bitcoin when it was like $700 per coin. Ethereum was $30 per Ethereum coin. I remember the first time Ethereum passed. I remember the first time Bitcoin passed $1,500. And so I actually had another channel called, I forgot the name of it, but I actually started a channel. I was like, man, for me to really learn more about cryptocurrency, I'm going to start a YouTube channel. It's going to force me to think of, make videos. It's going to force me to actually learn what I'm talking about. So I started a cryptocurrency channel. And then when cryptocurrency became like, a lot of people treated it like it was a scam. So it's like a scam because you bought the top. or it's a scam. Like it just became like my comment section was all about fake bots going in the comment section trying to sell all kinds of different cryptocurrencies. I was like, God, all this is sketchy market. It's like I couldn't make a video without my comment section with 1,000 scams in the comment section. So that's when I pivoted from cryptocurrency to actually investing. And then I started off with option trading. Everybody started off with option trading. that didn't last long. It didn't last long at all. You know? So that's why I'm an investor now. That's I always tell people, man, what do you be trading? Now, you know what? I don't trade, I invest. I mean, every now and then I'll tell you a couple of my things I do from when I trade. But back to how I started the channel. I think I was making a couple of videos, maybe a video a month over AMD. I actually started with AMD. I was buying AMD at like $8, maybe like $12. I was buying AMD a long time ago.
Hey, but it don't even sound real.
No, but listen, a long time ago I was broke. Once I was buying AMD, I probably had like 2 shares.
Yeah.
So like when I said I was buying, you ain't gotta buy a whole. I mean, I was probably a long time ago. I started with investing $50 a month. So this was me probably right out of college or still in college. I was investing like $50 a month. That's why I tell people it don't matter where you start, just start, and then you'll start to learn the market. And then as I really got probably by my second year of YouTube, my portfolio like passed $1,000. I was like, okay, now it's really seeing and start to pay off. I'm kind of learning what I'm doing. And then that's the more I learned, the more information I could provide to my subscribers. That's when my channel started to grow. So I went from posting like 1 video a month to 2 videos a month. And then from there, I probably got to like 30,000 subscribers. And then Corona hit. I'm at home all day. I was making 3 videos a week, sometimes 4 videos a week. So I was making 3 or 4 videos a week, and my channel went from 30,000 to maybe like 150,000 subscribers. And then maybe like last year, maybe about a year and a half ago, I had posted another video about how to get rich. And then that one it's almost up to like 2 million views. That video alone brought me in like 100,000 subscribers. Wow. That one video alone, it was a real good video. I went back, I was like, I can't believe I made that video. It sound like I know what I'm talking about. I'm taking notes on my own video. I was like, yeah, but that video was just mainly about buying, invest into what you buy. So I was telling people, it's like, if you own 10 pair of Jordans, 10 pair of Nike shoes, but you don't own no Nike stock, then you buying depreciated items. Or if you buy the new Apple phone every year, but you don't own no Apple stock, you buying a depreciated item. Or if you shop at Walmart, you buy McDonald's. If you buy Starbucks every single day, how you gonna buy Starbucks every single day, but don't own any Starbucks inside your portfolio? So that was one of my journeys where I wouldn't buy anything unless I had it inside my portfolio.
Oh man, but I need to make me rich. That's it, man. And so I know you were saying something about the some of the things you do when you trade.
Oh yeah, so I'm a real patient trader. If even I call it trading, I'm real patient. So I look at patterns inside the market, but it's a couple of patterns. Past performance do not always equal future performance.
I agree with that.
Past performance do not equal future performance. It do not. But there are trends inside the market. So the top 3 I look at is when a company announces a stock split. A good blue chip company announces a stock split, they usually outperform the market, SPY or VOO. They outperform the market by 6 to 8% every single time. When Apple had that 41 stock split, when Tesla had that stock split, when these companies, who else had one? Amazon? Yeah, Amazon has stock split. They don't happen often. They just don't happen often. So when you see a good quality company like them have a stock split, I start to load up. Even though nothing fundamentally changes at all. At all. It's just you had $1, now you got 4 quarters. At the end of the day, nothing changes at all. But to the retail investor, for some reason, every time a good quality company have a stock split, they outperform the stock market. So that's one of the things I look at. When I see that opportunity, I'm diving in. Another one is share buybacks. When companies announce they having a share buybacks, one of the biggest ones out there is Microsoft. They be buying back billions of dollars worth of shares. When there's less shares out there floating around, they buy those shares back, and then it makes the shares that you do have more valuable. So usually when they don't always have $1 billion buyback, but I think it was like 2 years ago or last year, they announced like a $2.5 billion, $250 million buyback. Or was it 2.5 billion? Microsoft is billion, probably billion.
I think it was 2.5 billion. Yeah.
When they announce a big buyback like that, that's when I load up. Now, this year they might only say 500 million. Next year they might say this, but when they say $2.5 billion buyback, that's when I start loading up on those companies. And then the last one I look at is the hopefully bad news, with like just horrible news come out about this company and the market overreact. So like a while ago, Johnson & Johnson had a call back on their product.
Yeah.
Stock tanked. Thank you. I go in and buy those shares for real cheap or buy some options on that. Man, Facebook. Now, Facebook was a little different because they went from Facebook to Meta.
Yeah.
And it tanked. It tanked all the way down. And I loved it. Oh, I loved it. Because nothing really fundamentally was changing about the company. They was still gonna be Facebook. Everything was still, they was pivoting a lot of their money towards VR.
Metaverse.
Yeah, they've been doing that for years on books. They just haven't announced it. But nothing really fundamentally changed about that company but the name. So when it tanked all the way down, bought all of it up. So like when companies announce bad news or just in the media and people overreact to the market, that's when I go in and scoop up a couple of shares for the low.
Most definitely. Now, when you think about bad news that's coming up, and Jose, I know this your one right here, but we got Tesla earnings on deck.
Yeah, I think that's tomorrow, huh?
Yes, sir. They're about to be up. So now, what's any predictions? Any predictions?
What I got with Tesla? See, I'm in a hard because I got a lot of shares of Tesla, so I don't really want them to do too bad. But I would not mind picking up Tesla at a lower price.
Yeah.
Like if it pulled, because I think not too long ago Tesla pulled all the way back to like 150, 120.
Yeah, I bought it at 115. I bought a bunch of shares. My foundation cost 115.
Yeah, that's I actually caught that dip and picked up like 100 shares of Tesla right there. So now I'm able to sell a couple options on that. And then hopefully tomorrow, I mean, I don't mind it going up.
Yeah.
Tesla was at 264 a month ago. And it's 208 today. So so I think somebody knew something, got a little pullback. I think it runs tomorrow or
to the moon.
I'm thinking go 15-20%.
Yeah. So I mean, once they start delivering that truck, actually using some of that technology, I could see them going back to the 300s.
Y'all heard what though?
I always see Tesla as more of a technology company than a car company.
Oh, definitely. But your boy said if he don't get more creative control over there, he gonna take his toys and he leaving. That boy trying to leave us all with the bag, man.
That's the only thing with Tesla is that it's all dependent. It's not really all dependent on him, but everybody else sees Tesla dependent as with him.
Yeah, that brother can't do nothing. Hey, that's Brandon right there, though, man. I'll tell you that's Brandon, man. And so now when you think about the balance that it takes, man, you know, you think about the channel, you think about all the stuff that you're doing. How do you find balance? And I guess you talked to a little bit about it from being just a trader. I'm an investor, so it's not a lot of fight as far as managing the portfolio. But when you think about the coaching, when you think about the content creating, the educator, the investor, you still got to do your research, man. How do you find balance? And let's say we got somebody who's saying, man, I never had time for the market. I can't get into it. How do you find that balance, man, and just keep yourself growing and abreast of what's happening? It's really,
man, you're a content creator. You already know it's hard.
Hey,
man, you really, I don't know how we find time, to tell you the truth. I don't know how we find balance. I mean, we get on camera and make it look like, oh, okay, yeah, I took the time out to record today, when it was like, man, I gotta record today. I gotta get this done. I gotta do that. So it's like being a content creator, you are one man show with everything, like everything. And I still haven't found balance. So I really can't answer that. But the one thing I did was I hired a video editor.
Okay.
So that saved me. I used to edit on my break at school or whatever, but now I could just boom, shoot a video, send it off to my video editor. That really helps me out. That's the best investment I ever made. was having a video editor, hiring a video editor. But like when it comes to school, you gotta wait. A lot of people on YouTube just think I just wake up and do YouTube all day. And I wish I did. Hey, I wake up, I go to school, I teach, then gotta go football practice, and football practice in Texas lasts forever, and then you got the games on the weekend. So during the season, it get kind of hard for me to keep my schedule. I might go from 3 videos a week to 3 videos a month, or 2 videos a week to 3 videos a month, or something like that. So it is a drop off during football season. You know, it get real busy, but man, just being a content creator is probably the best skill I ever picked up in my life, because you got a righteous, now you're a writer, you got to write your script. Now you're a profile because you're on camera. You got to learn how to edit. You got to learn how to do thumbnails. You got to learn how to script. You got to learn how to set up your lighting. You got to learn all these technologies. If I was to ever start a business ever in life, I would only hire people that do content. If you're a content creator, I would hire you because you know how to manage 8 different jobs by yourself. I'm going to find which one you was the best at. Oh, you best at video editing? You my video editor. Oh, you the best at writing scripts? Okay, you writing scripts. Like, I will only hire people that did content before, because they know. They know how to be their own boss.
Yeah. I'm taking, I gave up in the beginning, I gave up a whole year of my life, dude. Like, I didn't go outside. There wasn't no hanging out. 2019, I literally sit on the couch and I edited and I learned and I taught. A few years later, I got StreamYard and I gave that shit up. But but before that, and before I was going live, when you tell about the dedication to it, right, and just being able to learn all those pieces, manage it, posting, scribbles, woo!
It just make you better at any job that you do.
Yeah, most definitely. All right, man. Well, as we get ready to wrap this thing up, man, I wanted to kind of close out with just advice, man. Just coming from somebody who's been doing it, just talked about the journey, and really not just talking it, but walking it, right? For educators looking to start their financial journey, what advice would you offer them to get off on the right foot?
Man, to get off on the right foot, not everybody gonna have the same path. In order for me to actually learn something, I had to teach it. And I hate looking dumb, so I actually wanted to know what I was talking about. Even if it's just the smallest thing about, oh, did you know Apple was a technology company? It's just something like that, something real small that you could teach to a third grader, something real small that you could teach to a middle schooler, and then eventually you could teach to a high schooler, because they're gonna have follow-up questions. And once you're able to answer those follow-up questions, now you know that you're down the right path. So one tip in the beginning, if you really want to get into investing, I don't know too much about trading. I would not suggest people to trade to start off, because man, people don't be winning trade. I'll be watching, I'll be like, okay. I mean, I understand everything, technical analysis, all that, but just percentage wise, a lot of people fail at trading.
If you 30%, you killing me.
If you a educator, want to get started into investing, start to teach yourself to teach other people. Teach yourself. You're already a teacher. You're already teaching kids all the time. Teach yourself to teach other people, because one of the skills that I learned from teaching on YouTube is that I have to get all of my big brain ideas out of here and make it understandable to someone that might be watching my videos on YouTube. So I was able to translate high information to make it very understandable on my YouTube channel. And that actually helped me inside of my classroom. For me, I teach U.S. history. So what I do is all the U.S. history information that might go smooth over these kids' heads, I break it down and make it very understandable to them. And then like this year, I actually won Teacher of the Year.
Oh man, congratulations, brother.
Appreciate it.
Yes, sir. Come on, man.
Everything just translate throughout life. So you're a teacher, you're already good at teaching people, so just learn it.
You got a class of 300,000.
Huh?
I say you got a class of 300,000. You got to get tight. Yeah. Dude, man, I'm telling you, for the people way in the back, man. Hey, man, congratulations on all the success, brother. Man, I appreciate you coming on, man.
Appreciate it.
Look, man. Oh, had to go extended with the clap. Look, man, thank you so much for coming in. Like I say, brother, it's always good to hear, man, from a different perspective. I so agree with you, man. That trade, man.
That trade take a while to learn.
Man, to the white meat, man.
It takes a while to get disciplined. It takes a while to not see green and be greedy. It's a mindset. It's you know, because like you said, when you know technical analysis, that's just part of it. You know, that psychology of trading and knowing when to get in and get out. It's tough. You know, I remember the first stock I ever bought was Sunrun, $2.
Yeah.
Long time ago, 2014, baby.
Yeah. When I used to trade, I always be up 10, maybe 15% when I should be taking profit. Oh, it's gonna keep going, but I would let it go down to the red, -20, -30, -40. Oh, it's gonna bounce back. -50. Oh, it's gonna bounce back. -60. Oh, it's gonna bounce back. I was like, man, if I would have just set my stop loss at 10% and set my take profit at 15, risk to reward ratio 2-to-1 or 15-20, you know. It's good if I could give my thoughts to a robot to just stick to the script,
man.
Which they got that out there. I need to figure out how to set that up, but the human element got to play a lot with trading.
Man, look, I had to check myself the other day. I said, man, are you sad right now? It's like I got my head buzzed with a play, man. Like Friday, man, I had I think, oh man, that thing finna reject all-time high. Oh yeah, okay, bet. I seen a small pullback. I hit the button. Beep. Put. Hey man, that thing ain't seen nowhere around the number that I put for. Look, I'm talking about. I say, dude, this whole weekend I went through. I ain't want to watch no videos, nothing. Then I just had to kind of check myself up and get back to it, man. But I thank you, man, for the work, man. Jose, man, we appreciate you coming through. We need more, brother. We need more of us kind of talking to our educators because, like I say, a lot of people, man, looking for an outlet, especially when you get through teaching, man. We can't believe on TRS, man. We can't just rely on everything on that TRS. You better get you something on the side. So this is the beginning of it. Like you say, if you have not started, the best time to start was yesterday. The second best time is today. So do something about it. Be a bird, man. I think we're about to close this thing out. Zeke, if you can just share all the information, how can we find you? How can we catch up with the podcast? All that good stuff.
Yeah, you can find me on the Dream Green Show, YouTube. Just type in The Dream Green Show, and I should be the first one to pop up. And then social media, I'm on Instagram at same handle, The Dream Green Show. There's a lot of fake ones out there. I ain't got no underscores or no 18 Z's behind it. Dream Green Show. That's it.
Hey, look, man, that's when you know you made it. Hey, that's the best. What's that say? The best kind of flattery?
No,
hey,
they scammers.
Yeah, them boys scammers, man. Them boys say, yeah, man, I got the stock play for this week. Just send me 250.
Yeah, exactly.
Never hear from the boys again, man. Come on, man. All right, man. Jose, as we get ready to close this thing out, man, any final word?
Man, I just, thank you, Zeke, for, sharing that knowledge with us. I know, especially like when I got started, it was tough. And I know that the work you put in, not only for your content and for your trading and now investing. And so for you to be able to come in and help us out and just share some knowledge with us and our followers, I appreciate that, and we're going to get this money. We got no choice. So, we're going to keep our heads up and continue to go forward.
Yeah, man. Check yourself, man.
Man, thanks for all the things you do for education too, man.
I appreciate it.
Yeah, man.
Them
kids.
real, man. Yeah, them boys are real out here now. Cause look, man, I did not know from Louisiana coming down that Texas football was so real until I became a varsity football coach.
Oh yeah,
in Bryan, Texas, brother high school, man. Look, man. Had to give up my dog.
Texas football a little different.
Yeah,
man, it's real, man. But we here. Look, y'all, this has been another episode of AdminisTraders Podcast. Shout out to Zeke for coming through. This is one half KT and
JoJo. Hey, see, I think it's a lag over there.
All right, y'all, that's it. We will hold on, wait a minute. I can't even get to the doggone thing. All right, y'all. We'll see y'all next week. Make sure y'all stay locked in. 100.
This is Darnell with Broadcast Houston.
This is Dr. Tamara Beckford.
Hey, this is Candace.
This is London Underwood.
This is Kirsten Bass with Inner City Greens, and you're watching.
Y'all are now tuned in to
KTTeeV.
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 KTTeeV. Is that right?